We end our journey into the world of cryptocurrency trading with Chapter 8, Risk and Money Management. In this final chapter, we do a quick review of some tips and tricks for safe trading. First of all, be realistic. Trading in cryptocurrency isn't something that will make you rich overnight. Set some realistic targets for your trades over set periods of time and then monitor yourself closely. Use stop loss and take profit points to manage your trades and remove emotion from your transactions. Learn to manage your emotions. Create a plan and stick to it. Do your research and use credible information sources on which to base your decisions. Don't fall victim to fear or follow the crowd when they are moving in the wrong direction. When you feel a little too excited or worried, just slow down. Think. Use your data to make decisions that will help ensure your success. It is a cliche, but don't put all your eggs into one basket. It should be obvious that you shouldn't put all the money you have into cryptocurrencies. However, there is no need for you to put all the money that you are able to part with into one type of crypto coin. The majority should be in stronger coins like Bitcoin, Ether, and any of the top 5 in the market. A smaller percentage can be in new coins that have been performing well, but the smallest amount should be in ICOs or coins with little trading history. Learn to ease yourself into trading. If you are new to trading, start small and then start slowly. There is a lot to learn and a lot to experience with cryptocurrency, which can sometimes overwhelm even experienced traders. So test out a few coins and a few exchanges first with small transactions. Watch some videos of miners before potentially spending thousands on your own mining machine. If you do want to start with an ICO, only invest a small amount so you can get the hang of the process before committing more funds and increasing your level of risk. When you are ready, you will have a better understanding of what type of trader you are, what your strengths are, what your weaknesses are, and how best to execute successful trades. Make sure that you check your sources. When doing your research or just interacting with other crypto traders, make sure that you are wary of scammers. Don't fall victim to a pump and dump or fake ICO scheme. Do your homework, use trusted sources to make sure that you are monitoring the market accurately. Don't trade with more than you can afford to lose. The cryptocurrency market is a volatile one, and there are times when it seems like one day is a really hot trading day, then everything is collapsing the day after. To protect yourself, don't trade with more than you can realistically part with. You can start with a very small amount and build over time as you become a stronger trader. You will lose at some point. It will happen. You will have an off day and you will make a bad trade. Maybe even a series of bad trades. You are no different from anybody else and not immune from this happening to you. So don't put all your coins into one trade. When you make a mistake, learn from it and move on. Don't rely on guesswork, gut feelings, or the advice of others on what and when to trade. No matter how much trading experience you have, don't try to predict the market on your own. Follow long-term market trends, learn to read and understand the charting tools we have covered in this course, follow the news, watch videos, and learn new tips. Use both fundamental and technical analysis to get a really good sense of when it is a good time to buy and sell. Speaking of charts, it may be very tempting to monitor your coins in short time frames on your graphs. As a beginner or even an intermediate trader, but it is better that you focus on researching and monitoring long-term trends, rather than getting caught up in short-term movements. Things do fluctuate rapidly and can cause you to make emotional decisions that go against your plan. There are platforms out there that allow you to copy the exact moves of successful traders. Whilst this is tempting, doing this actually teaches you nothing and puts the control and your cryptocurrency in somebody else's hands. If you do this and things go wrong, you won't have developed the experience or the emotional control to deal with the mess and potentially fix the situation. Don't brag, and this may sound a slightly strange piece of risk management advice, but it is said with good reason. Bragging about your success in the cryptocurrency community will alienate you. And if that doesn't bother you, then keep in mind it also makes you a potential target for scammers and hackers. By learning everything that you do and your trading setup, they may be able to find potential weaknesses and then exploit them. So be very careful what you share and who you share it with. Finally, dive deep into the code. The most fascinating part of cryptocurrency is the innovation behind the technology. You should try to dig deeper and understand everything you can about what cryptocurrencies can offer, in addition to being a form of currency. Some of the most recent coin successes have been because of the innovations these cryptocurrencies have brought to the market. So look for coins that provide solutions to needs not already met in the market, and avoid clones of Bitcoin that will have minimal chances of success.